Hey, good afternoon. It's Pat with Alphahorn.com with our weekly update for the week ending April 5th, 2019. Not a whole lot to talk about this week. As we came into the week last week, we said we were very bullish, remained very bullish for equities, and once again, we had a great week. Here are the candles for this past week. The uptrend just continues nice and strongly, and they fit in perfectly to the wave count that we've been showing our subscribers and what we're looking for. We've been talking about equities making new all-time highs the first part of this year, and we've already seen that for a couple of the indexes, one of which is the semiconductors. This week, the SMH made a new all-time high, as did a few weeks back real estate. So those two have the Dow's getting close, the Qs are getting close for the NASDAQ. So, you know, everybody is kind of tracking just as we expect them to, according to our wave count and according to the system here. As we watch it approach this upper red barrier, we'll see if we might finally take a pause coming up. So we got a target, about 189.63 for the Qs for right now. So anyway, I hope you had a very profitable week. We did at Alphahorn.com. If you want to find out more, about the swing system, you can search YouTube. God, do a tutorial there talking about what the color of these candles are. We have green candles for kind of bullish, yellow is kind of a transitional candle, and red's a little bit bearish, but it requires more than just the candle colors. We explained all that in an earlier YouTube video. You come over to the website www.alphahorn.com, and we'd love to have you subscribe, become part of the community over there. We do nightly updates throughout the trading week, and a weekend update every week. Covering 12 different indexes, ETFs, both equities and commodities, gold, miners, silvers. Anyway, I hope that everything works out the way you guys wanted to this week. We'll see you next weekend with regard to equities, and I'll be doing a futures update as well. Take care.